If you're thinking about buying a home in 2026, there are 5 questions you need to answer before you make a move. And if you get these questions wrong, you could overpay, wait too long, or buy a home that does not actually fit your budget. Mortgage rates are still higher than many buyers expected. Home prices have not crashed in most markets. Rents are still expensive, and the full cost of ownership feels very different than it did a few years ago. So, in this video, I'm going to answer the 5 biggest questions buyers are asking right now. Should I buy now or should I wait? Are homes prices going to crash? And what will mortgage rates do in the near future? Is it smarter to rent or to buy right now? And how much house can I actually afford? And if you're thinking about buying in Florida, especially here around Lakewood Ranch, Sarasota, Manatee County, or along the Gulf Coast, make sure to stay with me because rent versus buy answer can be very different if you're looking at condos, insurance, HOA, CDD fees, or possible special assessments. My name is George Latos with Zackos Realty, and I help people move smarter, not just faster. If you're thinking about buying, selling, or relocating, or trying to understand what's really happening in the housing market, make sure you subscribe to this channel. Now let's start with the question almost every buyer is asking. Question number 1. Should I buy a home now or should I wait? This is the question behind almost every conversation I'm having right now. And the honest answer is it depends on your personal situation. But waiting only makes sense if you understand what you're waiting for. A lot of buyers say, I'm going to wait until the rates come down. That sounds very reasonable. But here's the problem. If mortgage rates come down, buyer demand may come back into the market. And that could mean more competition, fewer concessions, fewer selling credits, and possibly higher prices in certain markets. So the question is not just will rates come down, the better question is what happens to the market if they do. Because if rates drop and prices rise, you may not be as far ahead as you thought. On the other hand, if you buy now and the numbers are too tight, that's not smart either. You don't want to become house poor just because you're afraid of missing out. The right move is not to buy because everyone else is buying, and it's not to wait because everyone else is scared. The right move is to understand your payment, your cash reserves, your lifestyle, and how long you plan to stay in the home. Question number 2. Are home prices going to crash? This is probably one of the most searched real estate questions in the entire country, and I understand why. A lot of people feel that home prices went too high too fast, and they're hoping that if they wait, prices will fall dramatically and they can get a much better deal. But in many markets, we're not seeing a simple crash. We're seeing more of a selective market. It's true that some homes are sitting longer and some sellers are reducing prices, and some overpriced listings are getting punished. But desirable homes and desirable locations that are priced correctly are still getting a lot of attention. And that's why the national headlines can be very misleading. One market can be very soft, another market can be stable, and another market can still be very competitive. Even inside the same city, one neighborhood may have too much inventory, while another neighborhood has very little. So instead of asking, is the housing market going to crash, the better question is, what is happening in the exact market where I want to buy? Are homes sitting? Are sellers negotiating? Are builders offering more incentives? Are price reductions becoming really common? Are buyers getting inspection credits or closing cost help? And that's where the real opportunity is, not in guessing a national crash. Question number 3. What will mortgage rates do? This is a question everyone wants answered, but no one can answer it perfectly. Rates can move based on inflation, the economy, Federal Reserve policy, bond markets, and lender competition. So instead of trying to predict the exact rate, buyers should focus on a much more useful question. Can I afford the home at today's rate? That matters because if the home works at today's rates and rates come down later, you have an opportunity to refinance. But if the home only works if rates drop, that's a much riskier position. You don't want to be house poor in the future rate that may or may not happen. You may want to buy based on the numbers in front of you. And here's something else buyers need to understand. A lower interest rate does not automatically mean a better deal. If lower rates bring in more buyers into the market, the purchase price could be much higher and the competition could be stronger, and the seller may not be as willing to negotiate. Sometimes the better opportunity is not the lowest rate. Sometimes the better opportunity is the moment when you have choices, more leverage, and more room to negotiate. Question number 4. Is it smarter to rent or to buy right now? This is a major question for people relocating, downsizing, retiring, or trying to figure out where they really want to live. Renting can make a lot of sense if you're not sure about the area, or if you want to move again soon, or if buying would stretch your budget too far. There's nothing wrong with renting when renting gives you flexibility. But renting also has a downside. You're not building equity, and you're exposed to rent increases. And you may be delaying a decision in a market where the right home could become even more expensive later. Buying usually makes more sense when you plan to stay long enough, when the payment is comfortable, and when you have the emergency reserves, and when the home fits your long-term lifestyle. But here's where buyers need to be careful. The answer may be different if you're thinking about buying a condo, especially in Florida and especially along the Gulf Coast. With a single-family home, you still have to think about taxes, insurance, maintenance, repairs, HOA fees, and if the home is in a community. But with a condo, you also have to take a very close look at the financial health of the building and the association. You need to understand the monthly condo fee, the insurance situation, reserves, recent or pending special assessments, building age, roof condition, milestone inspections, structural report, flood exposure, or whether the association has enough money set aside for future repairs. Because with a condo, you're not just buying the unit, you're buying into the financial responsibility of the entire building. And that can change rent versus buy calculations dramatically. In some cases, renting a condo first may make sense because it gives you time to understand the building, the association, the location, the insurance, and whether the lifestyle really works for you. That does not mean you should never buy a condo. There are still great condos and great condo communities. But it does mean you need to do more homework before you buy. So when you compare renting versus buying, do not just compare the rent to the mortgage payment. That's one of the biggest mistakes people make. You have to compare the full cost of owning. And that means mortgage, principal, and interest, property taxes, homeowners insurance, HOA or condo fees, maintenance, repairs, utilities, closing costs, and in the case of condos, potential assessments and association financial risk. In some markets, renting may be cheaper in the short term. In other markets, buying may give you long-term stability. The question is not what is cheaper this month. The question is, where will I be financially and personally 3, 5, or 7 years from now? And if you're considering a condo on the Gulf Coast, the question becomes even more specific. Am I buying into a financially healthy building, or am I taking on someone else's deferred maintenance problem? Question number 5. How much house can I actually afford? This is where buyers need to slow down because affordability is not the price of the home. Affordability is the monthly payment, the cash needed to close, the cost to maintain the home, and the lifestyle you still want after you move in. A lender may approve you for a number, but that does not always mean you should spend that number. You need to ask yourself, after I buy this home, can I still travel, save, invest, handle emergencies, furnish the home, pay for repairs, and live the life I actually want? Because a house should improve your life. It should not trap you. And this is especially important in today's market because the cost of owning has changed. Insurance is higher than it has been in many years. Taxes can surprise people. HOA fees matter. Condo fees matter. Repairs cost more. And if you're moving into a newer community, you may also have an additional community fee, CDD fees, or assessments depending on the area. So before you decide whether to buy or to wait, do not just look at the price. Look at the full monthly reality. Here's the bottom line. If you're asking, should I buy a home in 2026 or wait, do not make the decision based on fear. Do not buy because you're afraid prices will run away from you. Do not wait because you're hoping for a crash that may or may not happen in a market where you want to live. Instead, look at the 5 things. Can you afford the full cost of ownership today, including taxes, insurance, HOA, or condo fees, and possible assessments? Do I have enough cash in reserve after closing? Do you plan to stay long enough for buying to make sense? Is the home in a market where you have some negotiating power? And does the home fit the life you're trying to build? If the answer is yes, then 2026 could be a good time to buy, especially if you're in the market where inventory is improving and sellers are more realistic. If the answer is no, then waiting may be the smarter decision. But wait with a plan. Use the time to improve your credit. Save more cash. Study the market, understand neighborhoods, and get ready so that when the right opportunity comes, you are prepared. Because the best buyers in this market are not the ones trying to perfectly time the bottom. The best buyers are the ones who understand the numbers, know what they want, and are ready when the right home appears. If you're thinking about buying, selling, or relocating, especially in Florida, Lakewood Ranch, Sarasota, or Manatee County, I'd be happy to help you think through the numbers and the lifestyle side of the decision. My name is George Latos with Zackos Realty. Subscribe to the channel for more real estate updates, Florida relocation advice, and honest conversations about what's really happening in the market. And before you make your next move, make sure you're moving smarter, not just faster.